What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. I am also the Director of Research at LaDuc Trading. It is January 27th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action in the indices, this incredible vol spike that we just had. We'll go under the hood, check out the sectors and style factors, take a look at some of the buy the dip trades that I took today, and then we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer as always. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. So let's jump right in. Wow, what a crazy day. So we're going to start off with the headline indices. We had the S&P 500 down 2.44%. We had the NASDAQ QQQ down 2.79%. We had the IWM small caps down 1.83%. And we had the Dow Jones down 1.98%. So this is the first time in quite a while where we've actually had a real bout of volatility, and the dip wasn't just, bought up by the end of the day, nothing like that. So if we take a look at this price action here, it is pretty clean, I must say. So if you take a look, we've been on a pretty bullish upward trend since the election. So this has been going on really since November. And you can see, trending higher, continuing. And I think there's a lot of really interesting undercurrents occurring in the market right now that need to be discussed. So we have these high short interest stocks that are really ripping. Like we have GameStop, we have AMC, we have Nokia, BlackBerry, just a bunch of those names that a lot of really smart retail investors have figured out, hey, for a stock like GameStop, 140% of the float is short. A lot of people have been piling into that trade to try to, essentially push their way into the stock. A lot of these are very low float. And, it's been a brilliant play where these stocks have gone up, by several, hundreds of percent. And I think it's causing a lot of pain in the marketplace where a lot of these hedge funds that were short those stocks, I think it's pretty much turning into an extinction event, where they're forced to essentially buy back their shorts at much higher prices and then close their long book, just due to this extinction event. So when that happens, you have these kind of terrible companies that are just ripping off of the share structure, and then you have a lot of good companies that likely were longs that are being sold off. So we're seeing just a lot of interesting dynamics going on in the market. Today was one of the first days where it just felt like dip buyers came in at one point during the day, but my reference point for today really was that 20-day simple moving average, and we just ripped right through that towards the end of the day. And you can see here that we tagged the monthly value area high. What's kind of interesting to me is, we are already approaching February. We only have 3 more days until February, or give or take, 2 more trading days essentially. And so we're going to be moving into this value area right here, the one that's, not yet lit up. So once we start getting closer to the next month, I start to look more closely at this value area than that one. So it's kind of interesting, the market still respected this monthly value area high. But you can see, if we get into next month and we're still trading below these levels, we're going to be beginning the month essentially in a downtrend where we are below the monthly value area low. So pretty interesting. Tomorrow is going to be a big day. We will have to see if we do get some sort of bounce or if we just get more pain. You can see this right here was the first trading day of the year, and we tore right through this entire value area. And you can see we pretty much tagged the lower end of it. Tomorrow I'm looking to see, okay, are we just going to rip right through this thing and go, down to 36.45? Or was this just an episodic volatility event that's going to subside? And you can see this sell-off day came on very high volume. And since we're looking at the S&P 500, I'm just going to pull up the VIX right now. And you can see the VIX is highly elevated. So this is kind of like, we're seeing some stress at least in the equity market. Let's see here. Yeah, so you can see, we closed right on the highs in the VIX. We closed, pretty close to 40 at like a 37 handle. And you can see in prior volatility spikes, these ones in December, they were much more mild. This one is more so, out of control right here. So I'm taking a look. Let me actually look. I'm going to flip back to, let me just pull up SPY. And I'm going to check out the IV percentile. Okay, so this is our SPY ETF. And yeah, the IV percentile, it's in the 84th percentile right now. So that definitely means, compared to history, implied volatility, it's very high. So let's see. I'm also going to pull up the VVIX. You can see VVIX didn't close on the highs. But yeah, the VVIX, closed at a higher level than it ever got to leading up to the election. So there's something going on under the surface. And I think for some of these like really fantastic companies, that are just being indiscriminately sold today, it's not necessarily about the company. I really think it has a lot to do with sort of like some instability on Wall Street. I don't know if it's completely related to this GameStop thing. Like, I know if you look at a lot of the sentiment indicators, they've been flaming hot for a long time. So we pretty much know like almost everyone is long this market at this point. And there's just, a lot of longs that can get washed out. So it might be like that GameStop issue adding stress, then you already have like a pretty frothy market. So we got this volatility event. And let's take a quick look. We'll go to the Qs. Yeah, you can see the Qs, did something very similar. They, went all the way down to the 20-day moving average. We did have Apple that reported after the bell. Apple had a pretty good report. They beat estimates. Let's see how they're doing in the after hours. I saw it looked like they were actually down a little bit in the after hours market. And people might look at this and be like, how could Apple be down? They had good earnings. But like if you look, the good earnings were priced in on this candle, that candle, that candle, that candle, that candle, that candle. So, the stock had already broken out, essentially pricing in, pretty good earnings. So let's see. So that's why I played Apple, for the run into the print. And I did not push it. I closed out my position on Monday. Let's see. So we have, Apple looks like, selling off a bit in the after hours. It is trading, around like $138 a share. And then Facebook also reported, I think they beat estimates, but I don't think it was anything, super impressive. Let's see. It looks like Facebook's actually trading up after the bell. So it's kind of interesting. So we have Facebook up. And then let's see Tesla. Tesla also reported. And Tesla also fell on the print. I mean, this stock, if you want to talk about something being priced in, Tesla's had such a magnificent run. But in the grand scheme, it's not really even down, all that much. So we're trading right within the monthly value area here. And we'll have to see how it trades tomorrow. But yeah, it looks like on the FANG earnings front, nothing really too crazy. Like you have Apple trading down 1% or 2%. Microsoft yesterday had good earnings. They traded up maybe like 1.5% today. Facebook's up maybe like 1 or 2%. Tesla's down a couple percent. So like nothing really too eventful on the earnings front. It's not like they all crushed it. It's not like they all did terrible either. So let's see what we have tomorrow. Yeah, tomorrow I'd say like less high profile names. We have McDonald's in the morning. We have American Airlines, Southwest, Sherwin-Williams. And then after the close, I see we have MicroStrategy and we have Visa. I'll definitely be interested to see what Visa does. Okay, so we have that. IWM, which has been, pretty much a bulletproof index. I actually saw some weakness as well today. And you can see IWM, the small caps, trading below their weekly value area. And when I look at the daily chart, yeah, you can see IWM had been avoiding the 20-day simple moving average for about a month or so, and finally tagged it today. So part of me is wondering, like, if this really just was like a volatility event or volatility episode. When you have the VIX at like a 30, what was it at? Was it at a 37 handle? Yeah, with the VIX at 37, there's a long way to go in terms of a vol crush. This is, pretty insane. So that's what I'm looking for. We're like, okay, if that was it and that was the flush, then this is a really good opportunity. But, if the VIX decides tomorrow to go from 37 to, up to 80 like it did prior to COVID, that's another story. But given this backdrop of Powell, coming on his testimony today and saying they're going to keep monetary policy easy, I just don't really see, like, why would the VIX jump above, this prior spike leading into the election? The VIX got all the way up to a 40. These are all the vol events in 2020. In September, we had a vol event. The VIX, the highest close back then was 33, so we're already well beyond that. And then this was like, when we had to shut down the economy again, the VIX got to a 40. So in the grand scheme of like past vol events and like what triggered them, to me this seems like it's overdone on the vol side. So I ended up buying the dip in a couple things, and we'll see. Like, I didn't really want to sell a bunch of holdings or anything because I'm like, everything I'm holding, I like the businesses. I'm not really in any short-term calls. All the calls I have on are for March or April. Some are even June. Some are January 2022. So I didn't really feel the urge to just like dish out a bunch of my holdings. So we'll see. If the market really is like broken, yeah, sure, maybe we wake up tomorrow and the VIX is at like a 50. But that would just be so strange. So I don't know. Tomorrow I might be in the market for some VIX puts. We'll have to see. But yeah, really interesting stuff going on. Yeah, taking a little bit longer on that today, but I just think, that's really what matters for today. And then if we take a look at these sectors and style factors, you can see pretty much nothing was spared today other than those high short interest names. So in this retail ETF, GameStop, I believe, is one of the largest holdings. And, maybe if AMC is in there, that is as well. But yeah, this one was driven up pretty much by that crazy GameStop rally. So this is kind of like the exception. And then a lot of these really strong sectors and style factors that I love, got completely clubbed today. So, I mean, for better or worse, sometimes when the market sells off, I get really anxious and I'm like, man, I got to go to more like defensive, more cash. For better or worse, today I was more so just like at ease and just kind of like hodling. So we have KWeb, which has been, on a really nice tear, down 2.59% today. So let's take a look at that one. And KWeb is one of those where, at least for myself, once this thing started going, it's like, man, I wish I could just get a pullback so I could get in. Now we've had essentially like a 2-day pullback. It's still pretty elevated. But yeah, nice little pullback in here. The solar stocks were down significantly today. You can see this tan solar ETF actually broke down below the 20-day. And this solar ETF has been respecting that 20-day since, I see here, back in November during that volatility spell it broke below it. Yeah, you can see, nice little pullback here. Then we have, what are some of these other ones? Yeah, you can see the ARK funds all took a hit. The healthcare ETF, semiconductors down 5%. So when I see this, it does just look like, okay, that there was some real selling today where, just indiscriminately selling all these names. So that's where, in my opinion, you can find some opportunities. And especially like in the long-term accounts, like if you're like a long-term investor, on big volatility events like this is more so like where you want to be buying stocks. Like a long-term investor, they're not going to be in the market every single day like traders are, like buying day in and day out. It's kind of like you wait for nice juicy pullbacks and you buy. And who knows, maybe tomorrow's an even deeper pullback. But with the VIX this high, I don't know. So we have semiconductors. Yeah, you can see those broke below the 20-day as well. And this is what happens when you get really, just exacerbated volatility and like these vol events. That's where the market just doesn't respect the technicals at all. It's like, okay, the 20 days right there, like no problem. It just slices right through. So yeah, when I see some of the strong sectors that are just ripping through technical levels, that to me is like, okay, today really was like a big sell-off day. So we have those. Let's see the style factors. You can see, yeah, every style factor was red. Oh wow, that's kind of interesting. So the past couple of days we saw Minvol showing some relative outperformance. We saw like defensive showing relative outperformance, Minvol, all those. I see today high beta got killed again, down 3.11%. It's our worst performing style factor now. And you can see up at the top of our momentum list, we have high div, low vol, which was barely down. It's pretty interesting stuff. In terms of some of the trades that I put on today, I bought the dip in this ARK genomics fund. Like I see in these videos, pretty much on every market correction, I always like to add to my ARK funds. And you can see here this genomics ETF. This is something where I just think it's a quality asset and I would like to hold it for the long term. So I make a habit of whenever the market corrects, typically I will buy some of the ARK funds. Last time I bought ARKK. This time I wanted to buy the genomics fund specifically. So I purchased some of this today. I also dip bought some CrowdStrike. And you can see my stop right here. Yeah, so I did bought some CrowdStrike. CrowdStrike, is another high quality company. It's kind of breaking through those technical levels, but you can see there were some buyers that came in to support this one. So you can see, closed with a pretty much a doji candle, but slightly green, where it closed, higher than it opened on the day. So we'll have to see what happens with CrowdStrike. Yeah, there were a lot of things that I was looking at. Like I was looking at MSOS. The cannabis ETF, you can see this one also, breaking down. Clean energy fund, also, really struggling today, down 6.28%. So they're, definitely a very weak day, a lot of weakness. But some of these like really high quality assets, I think that's the difference for me in 2021, where I'm more cognizant of like, okay, which are the things that are really the highest quality or, just higher quality in my opinion that I want to be holding for at least the rest of the year. And, when we get a deep correction, it's like, okay, I'll dip my toes in and buy some of it. So this is another one that to me, like, if we get an even deeper correction, I'll likely, buy some of this clean energy ETF. So let's see. Another thing I did, let's see what else here. Yeah, I took a stop on, what did I take stops on? Yeah, for me, it's kind of just like, these 5 to 10% corrections, they happen quite often. So it's not really something where, if I had been like short coming into today, that would be awesome. Like I would be like nailed it with the short, whatever. But like when we're already in the midst of a correction and the VIX is at like 37, I don't know. I'm just not gonna get like too excited or like too ready to short the market or anything like that. That's just me. I could be totally wrong on that. Maybe this is like a 20% dip in the making, but I don't know. Let's see. Where is this? Okay, yeah, so Progeny, I got stopped out. Got stopped out of some common shares for a loss. Progeny actually held up, pretty well today though. The dip buyers came back in. So this is one where who knows, I could be right back in this one, pretty shortly. This definitely looks like it was showing some relative strength. FTCH, it's another one I got stopped out on. This one didn't look all that great. Yeah, so I don't really mind getting stopped out of. Yeah, so I took a loss in this one. Well, that's okay. I mean, that happens. I'm glad they were just like common shares. And then Big C was one that was buoying my portfolio today. Big C was up, 4.26%. I have my March calls on in there. And then GoodRx was another one that was behaving pretty well today. And Big C, I think it does have like a 30% short float. So part of me is like, is Big C being lumped in with these other companies that are just getting bid because they have a high short float? Most likely. So we'll see. Yeah, Big C, I added my calls, back when I was trading around 70. We got up to, 90 in short order. So we'll see. I'm going to be looking for that target at 98.25. Maybe that was our touch of the target right there. So we'll see what happens. But right now, I'm just going to keep, holding it while it's riding that 5-day EMA. Let's see what happened with Dragonfly. Dragonfly also got hit today, but I see it's respecting the 5-day EMA. So that's another one where I'm like, all right, this one I'm sitting in it from like 90 cents a share. So, if there's a pullback, that's okay. So we'll see. And GoodRx. Okay, GoodRx closed down 1%. At one point, this one, was doing really well on the day. It was up at like $53. Yeah, GoodRx still looks like it's acting well. So we'll see. And then in terms of our options order flow, let's take a quick look. I didn't see anything too crazy there today. And I am going to be posting my affiliate link for Cheddarflow in the description to this video. For anybody that's interested, if you want to do a 7-day trial. Let's see. Okay, yeah, this is when I was just filtering specifically for the Apple calls. Most of these players bought Apple calls, out to like June of 2022. So it looks like more like long-term purchases. I see these people got February calls, so they are likely going to get burned on those. Yeah, I see some Marches. But yeah, a lot of people are pretty bullish on Apple into the print. So we'll have to see what happens with that. Yeah, look at this. So I see these SPY puts going up at 403 after the market closes. And I see these are for February. So that's typically what I like to see. Like, I love to see when the market is down big and then people just, are essentially buying like capitulatory puts. Because we all know, like, who wants to be buying puts into like a 37 VIX? Because it's like, what are you expecting? The VIX to go up to 50 or like go up to 80 like it did for coronavirus? And it might, but it's not the same as like, buying puts yesterday on the high. So I like to see that as sort of like a sign of capitulation. And we'll also have to see once like the put to call ratio comes out, all that stuff, what happened. Yeah, I see some UVXY calls. Yeah, also going up at 352 and the market's like on its lows. End phase going up at 342. I am long end phase. Let's see what that one is doing. That might be one I want to add to. Yeah, end phase just completely broke all the technical levels, just getting destroyed. Let's see what that looks like compared to the tan. And I purchased, funny enough, I purchased end phase. I think I'm pretty much at break even. I think I purchased end phase right on, like on one of these candles in this consolidation. So that's why I say in these videos a lot, I don't like to buy things when they're extended. Because when you buy when it's extended, like if I had bought end phase, really quick just to rewind, when it was extended off the moving averages, likely I would have gotten stopped out somewhere along my path here. But because I bought it, at a reasonable spot compared to those moving averages, even now, end phase went from like, let's see this 220 to 180 very quickly. Like I don't really feel as much portfolio pressure, which is good. So maybe that means we're going lower. If I'm not feeling the pressure yet, we'll see. Yeah, we have these GameStop calls going up. Yeah, I saw a bunch of these players. Oh man, let's see if they can keep it going. February 19th, they came in at 335 with 16 million of calls. Oh my lord, so this is nutty. So if they bought, I'm just going to nerd out really quick here. This video is going to end up being like 40 minutes, no big deal. Let's see. So if they bought $16.5 million worth of February calls, let's see, there's 16 strikes. So that is the equivalent. We do have to take into account the delta of the options. I don't have that offhand. I don't care to grab it, so I'll just assume, it's like a delta of 1. Oh yeah, and these are 16 strikes. So yeah, the delta is going to be very close to 1. So if they bought 500 contracts, yeah, so 500 contracts times, 100 shares. Yeah, so it's like 50,000 shares worth of GameStop. Yeah, and GameStop's at like $300 a share now. Yeah, so my point is when people start throwing like millions and millions of dollars at GameStop, the float is so small that dealer has to hedge by buying the stock. And the stock is just like really not available. That's where like you get those crazy gains. So these gamma players, like I know a lot of people are like, man, these gamma players, like it's unfair what they're doing. But I think this has become like a very, I don't want to say legit strategy, but like a real strategy that there's players that do this because I see this all the time with Tesla. And like for me, I participated in GameStop on the way up, but I didn't like get, the life-changing gains. For me, I always just see it as like an opportunity where like maybe in the future I'll be able to catch those. So for me, I like to be cognizant, like this gamma squeeze thing, it's a real strategy. And maybe in the future I can grab, one of these stocks or whatever and make, even more money off of it. Expedia, which I do own, somebody came in with some 60 strike calls at 302. Expedia was another one that just got clubbed. And I have my leaps in Expedia. Hey, you can see this one, another one that just did not respect the technical levels whatsoever. Before we know it, this correction continues. Expedia is going to be back here at like $100 where it was before the election. So we'll see. Maybe it gets there. More GameStop. Yeah, a lot of Apple. We got some Netflix players. Nokia is another one that's part of the short squeeze dynamic. And you can see they bought these at 2 o'clock p.m. Yeah, Nokia is another one, just crazy move. So we'll see if they can keep it going into the weekend. But yeah, that about does it in terms of this options activity. I see some puts here. It looks like some ARC puts somebody bought at 9:30. So that was a good trade that they got into at 9:30. That about does it for this market recap video. Hope you all had a great trading day, and I will see you all tomorrow.